Well, hello and good evening, everyone. This is George from GettingMarketMoney.com with today's Currency Corner for Thursday, August 19th. So, we get started here with a look at equity markets during the day. Another down day. Some markets down over 1.5%, such as the S&P 500, and Dow was close as well. Asian markets aren't doing much better. Now, one of the major catalysts for the market moves today was the unemployment claims out of the United States. Yesterday, I went on the record saying it would be around 500,000 released, and today it comes out at 500 on the nose. So, if anyone wants to send congratulations, I take PayPal's, money orders, cash, whatever you like, gold bars, wine, cheese, send it on. But all jokes aside, it came out 500, which means much more jobs were shed than expected. Expectations around 478,000. Markets dropped after that news release. I didn't twitch. I just smirked. I knew what would happen today. It happened, and we'll leave it at that. As you can see, gold is at $12,033.90. It's taken a bit of a slowdown, and it's down $1.50 in the Asian session, which I like. I want gold to drop to about 12.20ish or so I could pick up some more options and gun for the top on that during the seasonal strength. What you see here is a chart of the S&P 500 ETF SPY. You can see price action has broken down today below the 200 EMA. I have purchased put options on this stock myself, or on this ETF, and I'm going to ride it down, as I don't think the S&P 500 is quite ready to make a run at that 113 top and continue on bullishly. I see weakness. I will play it as if though it was a weakness, and I will make some money. Keep you posted on that trade as it unfolds. Moving on to currencies, as it is the Currency Corner. First, we start off with the Euro USD daily. Now, we don't like, and myself especially, I don't like very complicated charts. If you can't see the price action clearly when you squint your eyes, you are looking at too much crapola. But let's just have a quick analysis here. As you can see, price action to the upside has been broken. The trend is no longer bullish. The bears are now in control. With this break to the downside, especially. For a moment here, this break signaled a bearish weakness. As you can see, 200 EMA trendline support broken, down we went. We caught that trade. I told everyone when I was placing that trade made us just under $2,000. So now we see a bit of a consolidation once again, which is fine with me. The consolidation is happening in between the Bollinger Bands. It is also happening underneath the EMAs, but it is pinched at the support line. And this pinch here is quite beautiful because this tells us a breakout is imminent. So we're waiting for it to happen. Once it does break out, surely it will be to the downside. And down we go to 125-ish or so. This level is what I'll be looking at. Nice sell-off. I'll be happy. However, that's not to say that there is an upside potential. We could see some stronger price action tomorrow, bouncing around, some profit taking from this short that happened during the week. Traders want to take the money and feel safe for the weekend. That is possible as well. Tomorrow is a bit of a risky day. If I were to trade myself, which I don't think I will be tomorrow, then again, you never know. I would be placing my stop around here, the 129.50. Keep it safe today. Don't take on too much risk. Keep it in your pants, boys. Tomorrow could be quite a ride. It is a Freaky Friday, and as such, consolidation looks like it could be the order of the day, but I wouldn't be surprised to see a jump in either direction. Also, tomorrow there's no massive or major fundamental economic releases, therefore the charts are in the hands of the charticians and technical analysts such as myself. So we will see what happens. I might actually switch over to a 15-minute, 1 hour candle or chart setup and try to catch a scalp, but I'm not going to be greedy, and I don't suggest you get greedy yourself. Remember what happened to Gordon Gekko now. Alright, so moving on to the next chart, Canadian Japanese yen. This trade I really like for one main reason. Technically, it is very sound, but also it's fundamentally sound. If you look at this trade, I mean, what you see here is a beautiful triangle formation, and it is a descending triangle in this case. Let me just pull up some resistance levels for you. In this case, it's support to the bullish movement. As you can see, this price action here shows us that the trend is to the downside. Now it's had multiple bounces, and it's went, descending triangle, as you can see here, and I like that myself. And there's two ways to play this. One is to just short it outright. However, that's a bit of a riskier strategy, but if you were to do that, stop loss would be around 83.60. However, what you could do is do a limit order strangle, or in this case, with limit orders, you would put a short around this level and a long around this level with a common stop loss. Let's just change that up here. Common stop loss around this level for both. Let's see here, it should be the middle. Around there, that's where your stop loss is going to be for the long or the short. Now I'm more lenient towards a short. I would feel more comfortable putting my hard-earned dollars on the short side of this trade, mainly because the Canadian dollar, or the economy as a whole, seems to be facing some headwinds. It's in a little bit of a slowdown, and that will push the currency down. While the Japanese yen is the favored safe haven status currency, it will enjoy some capital inflows from investors who are too scared to put money elsewhere. So those two factors are supportive of a short here on the Canadian Japanese yen. So I'm going to be short, no surprise there, around this level, stop loss around the 83 range, and ride it on down. Now if I show you the weekly chart to this, which I'm going to do in just 1 second. I didn't take a snapshot, but I'm just going to pull it up on my system here. Don't look at my balance. Oh, it's not on there. Lucky me. If you look at my system, it's been ranging for the better half of a year now, or actually for a full year. You can see it's been in this tight range. The beauty of this is if it breaks the upside, we've got around 700 pips to go. To me, that's over $4,000 profit I could lock in from this trade. If it goes to the upside, I have around 800 pips potential with a very low risk entry. If it goes to the downside, I have around 500 pips, but again, with a very, very low risk entry. Doesn't get any better than that. Sell the house, sell the farm, pawn the kids, and put the money into this trade. Obviously, I'm kidding. Don't take my advice for it. Read the disclaimer. I'm not making any recommendations. I'm just saying this is a great trade. I like it myself. Keep an eye out on it, and I'll keep you informed. So again, tomorrow, there are no news. Trade carefully. Don't put too much capital on the line. Live to fight another day. And just don't do anything irrational or stupid. Okay, so good luck tomorrow. If you have any questions, comments, concerns, or emotional breakdowns, you know my email, george@gettingmarketmoney.com. Don't hesitate to shoot me an email. I'll get back to you. Just give me some time. I'm awfully busy during the days. Hell, I'm awfully busy 24/7, but I make an exception for my frontline market soldiers. Alright guys, it's enough for me. Go enjoy your evening. Have a great day trading tomorrow. Take care and talk to you soon. Bye-bye.